Good morning to all traders and welcome to this Thursday's Market Insights video brought to you by Orbex. Today is the 27th of February and we'll talk about FX majors. I will actually talk about euro dollar, the dollar against the Japanese yen, as well as the Aussie dollar, because it actually heads lower to an all-time high. That is also the case because US yields are falling. So some of the market participants are expecting to either buy the dip, or we can either expect a V-shaped recovery in the markets that potentially could come after Chinese stimulus, if you may. But of course, with the coronavirus cases increasing now globally, we might see this short-term breather to only just be that. Specifically speaking on euro dollar, we had some data on Monday supporting the euro with German IFO, and this is when we started moving to the upside. However, I do see this move as a correction. There is two different ways to look at this scenario. Of course, one is that we've had an AB NSC, and now it's the time that we will start moving lower to complete, of course, the last wave, the minor wave below the previous low of 107. Or the other scenario is that we've had a triangle pattern here, okay, and then we're going to go for a big correction, and then we're going to see another impulse. So pretty much this is going to be some sort of zigzag pattern that potentially could see some higher highs compared to the current market structure. Potentially looking to move up to 110 maximum, in my opinion, but I think because, I mean, the economy isn't really doing well, okay? One piece of data is not going to change the whole course of the European Union. So I believe the 1094 makes a very good level, which is also the 38.2 Fibonacci retracement of this move. Now, just for the record, we talked about this being 1, 2, and 3 down here, and then we can expect a 4 and a 5, right? So the downside still potential. It's good. We've missed hitting this trend line down here, so I am expecting that to move in the medium term lower to take out at least that level, okay? Dollar yen, we talked about this ending diagonal here, ending triangle, right? A, B, C, D, and it looks like that could go down all the way to 106 or so for D. However, no, I'll be honest, I don't really like this for a D wave, okay? It does look corrective indeed, okay? And that might mean that we're going to see a different pattern with an A, B, C here being a W, then this would be an X, and then we could expect another ABC move to become a complex pattern, let's say, in the primary degree. Now, in the shorter term, I see this move to the downside quite impulsive. So it looks like this is a 4, and we'll go down for 5. So this could be wave A, and then we can see an ABC, and then start moving lower with another impulsive move. Or this could indeed be an AB and a C, which means that prices are gonna start moving higher from here, right? Now, we could go down to the 109.65, which is the previous wave 4 as well, and that would make a very good double bottom here, where traders can start looking for prices to move higher, right? Now, on the MACD, okay, we see a very good bullish divergence here, hidden bullish divergence, right? As well as on the RSI. And this is what makes me think that very shortly we're going to see prices start moving higher, okay, and following this impulsive move to the upside, of course, because all these profits now have been taken out. The trader who actually started entering here seems like he's taking all the profits out. And but however, the Japanese economy weakening is an indication, an early signal that we might see the dollar yen moving higher. If we take into consideration how much the US is doing better compared to other countries as well, then I wouldn't be surprised if that was the case. Now, Aussie dollar reached a very, very low level. Now, we're talking about this potentially being a triple zigzag. We failed. Markets turned out to crash lower at a different time. So now I'm calling this a WXY with wave 4 over here, and I'm still expecting wave 5 to end. It could have ended, if you may, because we are below 3, but I still see more downside because of the way these move to the downside is unrolling, which means pretty much, as you can see, we have 1, 2, 3, I'm expecting 4 and a 5, right? And I say this because in the smaller degree, I see 1, 2, 3, 4 triangle and 5 with a 5 wave move to the downside. I believe this is very close to ending this move in the minute, at least, degree, and then we should see a 4. So I'm expecting sideways, to be honest, because this is not really sideways marketing. Wave 2 is quite sharp. So I'm expecting sideways 4 and then another move to the downside. Potentially could go to 64.50. If we take into consideration wave 2 intermediate and 3 as well, the extension comes down to 63.22. So I wouldn't be surprised if we see prices moving, sliding lower as well. And that, of course, would depend as well on how the RBA is delivering their next guidance.